This week's Index Watch is all about oil. If you've been tracking the news, then you definitely have seen that the US has blacklisted two major oil companies, Rosneft and Lukoil. This deadline for companies and countries to comply with stopping transactions with these oil majors is 21st November. So you would expect that oil reacted pretty violently to this news, but all that's happened is a $4 climb from last week. Oil prices are still below the highs from the last 1 month. So why isn't oil on the boil? This comes down to three simple reasons. The first is in terms of oversupply. The IEA estimates that there will be an excess of 4 million barrels per day of oil that is produced in 2026. This is roughly equivalent to how much Russia exports via the seaborne route, which is an important metric for India to measure. The second reason is in terms of excess capacity. Now, OPEC countries alone have spare capacity of 3 million barrels per day, which could feed into oil supplies should there be a global shortage. The third reason is something that most people haven't really been paying attention to, which is China's electrification game. China's electrification policy has actually destroyed oil demand by 1 million barrels per day in 2025 and could climb up to 1.75 million barrels per day in 2026. So clearly there's less demand, more supply, and more potential supply in the markets, which is keeping oil prices muted. So where do you think oil's future is heading? Share your thoughts in the comments below.